Hi, welcome to the Market Alert for Monday, the 22nd of November 2021. So we are in mass Jonestown delusional territory as inflation has proved more sustainable. US stocks have a near-term date with an elevator shaft, and I described this actually in Friday's Market Alert about how you get the stair step up, and on the way down you get the elevator shaft, and that's what this is alluding to, because inflation is continuing to grow behind the scenes and it's dominating the news. Well, the alternative news, that's for sure. No turning point yet. Soaring food inflation to continue into 2022. Commodity expert, this is bad news for consumers. It's already bad news. It's going to be incredible where this is going to end. And Jim Grant, the Fed reminds me of a speculator on the wrong side of the market. Gold will come into its own. Raging speculation when this great speculative episode, correctly called the everything bubble, bursts. Yeah, it's been known as the everything bubble for a long time. Wall Street Journal editorial board says choice for Fed chief between Tweedledum and Tweedledee. What's the difference at this point? Does it make any difference? I'm not going to go into the differences. One's for rate hikes, one's against. One for QE, one against. So yeah, that's in a nutshell. Biden faces the most important economic policy decisions of his presidency, which is expected this week when deciding who should lead the Federal Reserve when Chairman Jerome Powell's term expires in February. So that decision is to be released this week. Speaking of news and thing this week, we've got no news today. And tomorrow we've got all of the flash news, which is a pain in the rear. It's that one day in the month when you've got a news item after news item in the first part of the German DAX. Wednesday, it's all sort of US news up to this point, which you can see. You've got a bit of German business climate, but we've got preliminary GDP, core durable goods, unemployment, etc., all the way through. And then we've got the FOMC meeting minutes as well on 7 p.m, which is interesting because we go into Thanksgiving on Thursday. Now, on Wednesday, it's generally half-day trading. Thursday closed, Friday half-day trading. As I've said at this time every year, Thanksgiving is bigger than Christmas for the Americans, so expect the market to be fairly quietish and one-directional on Thursday. We've also got Lagarde speaking, Bailey speaking as well, and Lagarde back out on Friday. So an interesting week from Wednesday. Next couple of days, not a lot to report there. So let's start off with the Dow, see what the market did on Friday. Well, we know what it did. It sailed to the downside, didn't it? We had a big bar to the downside. The market failed to hold, but then we had the option expirations, the largest since July. And as we know from when we look back to July on the DAX and the Dow, the market was under immense pressure on those on that occasion as well. And this is also what happened during Friday's session as well. So now you can see the market attempting to move back to the upside. I've drawn in some fibs, but I'm just going to redraw those. So I don't know if they actually look right from there to there. Yeah, it was the right place. These are the upside targets where you can expect some resistance, in particular at 62% would be the first sort of area where you can expect this. But at the moment, price is starting to move back, as you can see in the 30-minute chart, to try and get above the daily pivot area there, which will be required. At the moment, we're above the 20-bar moving average and making a few closes above the 5-bar at a close below there, but you can see now turning back to the upsides, which again, if there's no news today and the option expiration is out of the way, it allows the market to then move to the upside. And in the 30-minute chart from this high to Friday's low, again, you'll be able to see exactly where those fib retracement levels are, and they're a lot clearer in the 30-minute chart or a 60-minute chart or a 4-hour chart. That's just I like a 30-minute chart on an intraday basis, so just to see where these numbers are. So we'll just save that so I don't lose them. And then in the German DAX, also getting a reversal on Friday. I've zoomed in a lot on this. The first thing to note is that we had a new all-time high during Friday's session. This came in the pre-market, which was already making all-time highs as I was recording. And then, of course, the options expiration took over and sent the market to the downside. It stopped at 62%, which you can see there. There was a lot of selling around, but the market came off the low. And the reason for that, if you look at the 30-minute chart, you will see demand coming into the market here as prices rallied back 100 points and then traded sideways before starting to move to the upside. And again, in the 30-minute chart, you can use the fib retracement to draw from this high on Friday to this low and then project back the fib retracement levels, which you can see there. The market currently coming through 50%, 62 ties in with the 200 MA there as well, and 78% tying in with Friday's DP level as well, and 89 of course tying in with the R1 level as well. So you can see all of those resistance levels to the upside there as well. Should there be any movement to the downside, then it's a case of just drawing in those fibs to the downside as well. And also, of course, on the downside, the most crucial thing in a bull market is the previous day's low, that it's not breached and that the market finds support at this level and moves to the upside. On an intraday basis, or a bit further in on the intraday on Friday, the market was moving higher as I was recording. It then put in its all-time high, which you can see there, and we ended up with resistance here. We had 3 or 4 attempts to take out this level, and I'll just redo that for a second and stop it projecting to the right so we can see the number. So there's your number. We came back and had a look at this 3 times at the 297. The 300 was the target, really, the BRN, the big round number. Market failed to hold, traded sideways at Friday's high, and then as soon as the market opened, the selling came in. Then it increased as the market moved down to the close, where we saw a bounce and the DP level there as well being tested. You can see the volume there with the market bouncing to the 200 MA before it then puts in a 78% retracement and then starts to struggle with the 20 bar moving average. That becomes a resistance. We then see the market sell off all the way back down to Friday's low, where initially it found support there, which you can see with this cluster of volume there trying to buy back, and you see him swinging the market back there. Again, runs into trouble at the 20 bar moving average, as it does here, and then once it closes back below the 5 bar moving average, it then has the impetus to then break through the low and trade all the way down to the S2 level there and the psychological level of 16,150, where the market then again sees demand, further selling, and then some buying back to bring the market back in the morning. And then it drifts lower again, trading down to the S3. Now the S3 is really important, as I mentioned before in the market alert, that 90+% of the time the market will stop at this level, and that's precisely what we see here. Market moving to the upside there on news, and then we've got selling pressure in here. We've then got more selling there with selling bar, and again this is now the low becoming a resistance area, and you'll see that across here we've got this low also again once becoming a resistance area. Despite the fact that prices closed above the 200 MA there, as soon as they got to the low and the 16,200 area, the market, once it closed below the 5 bar, the 200, it then continued to move lower and then closing below the 20 bar moving average as well and trading down. It trades down, as you'll see here, from this low to this high. We see 62% retracement there, and if we just drag this across as well, you'll see that we end up in 78 and 89 territory as well. So from here to here, projected back, this is where the market then finds that support. You can see the market being tested there. So we had a short signal that found support at the S2, failed to move any lower, but then you can see the demand coming into the market here. Market closes back above the 5 bar, the 20 bar, and then rallies back to make a double top at the previous day's low, which was Thursday's. And then eventually moving in, I say, down to this low. And then the US finding a bit of support, but the DAX also are holding. And then overnight, the market started to move back to the upside, bit of a bounce. Until we got close to here. Again, we've got this resistance across here at the moment. And the market obviously finding this an area of selling. So we'll be looking for these sorts of areas to find some initial support, and failing this, then we'll look for support here. And then we've got the 200 MA and the DP area as well, that hopefully will hold prices so that they are free to move back to the upside, because that's what they want at the moment. But certainly Friday has shaken up the run. I think it was 5 consecutive days of new all-time highs has now been put to rest at this point. And in the metals markets, well, as I said in Friday's market alerts, silver looked weak. We've got consecutive lower highs at the moment, and lower lows as well, which is indicative of a change in trend. Prices are seeing a bit of support on Friday, which you can see with the olive green bar, and also moving off the 2450 on the overnight. And we'll look at that in a bit more detail. You can see on Friday how they slammed the price down. Just came out of nowhere. Later on, the market had moved up nicely at the London fix, which I was surprised to see actually, but they just kept it for a bit later on and moved the market lower. But overnight, price is finding support at that 2450 level, and also the low of Friday, which is very important, of course, and moving to the upside there. It's a quiet week this week, certainly as we get into the latter part of the week. So it depends whether they're going to use the quiet market to slam the price or not. I don't know. Certainly it needs to move to the upside and break out of that $25 area. It's incredible, frankly, that it is still so cheap. The only thing, when you've got raging inflation around the globe in everything you could ever purchase, silver is cheaper than it was 42 years ago. Gold also being hammered to the downside on Friday as well, but still stuck in its sideways range at the moment. So, again, we need to break out to the upside. I think, as Jim Grant said, he's absolutely right. Gold will come into its own raging speculation as the stock market moves to the downside, once allowed to do so, of course. And the dollar also spiking higher on Friday. If we look at the 30-minute chart, you can see why they took advantage of slamming the price of silver. They managed to move the price of the dollar to the upside there, with prices trading up to 89% before stopping. At the moment they're sideways and attempting to move higher. If there's any upside momentum in this market, that's going to put further pressure on silver, which, like we say at the moment, is just trading sideways and hugging the DP level there. Okay, I think that's it for this one. An awful lot there, but a lot to catch up on Monday morning, sort of targets for the week, see where we're going to be trading. And let's see what happens during today's session. As ever, thanks for watching. See you in the next one.